Well, let's get the view from Dr. Stephen Nash from FIIG Securities in Sydney. Dr. Nash, well, welcome to you.
Hi.
Very interesting, we have seen Australian government bond yields jumping dramatically. You could say that that was by dint of what the Reserve Bank didn't do earlier this week. But do you believe that offshore demand for our AAA rated debt will continue?
Look, recent market discussion indicates that there may be increased allocations to Australian currency from various sovereign wealth funds, and that may increase demand on the currency and also the bonds. We've seen the Aussie-US spread in the 10 years go out a little bit above 200, around 210 now. That would represent quite good value for global investors, and I imagine that the demand for Commonwealth government debt and semi-government debt will be quite strong in the next quarter. Yeah.
It's very interesting. You've had BlackRock's chief at fixed income, Stephen Miller, saying if you use any traditional valuation metric, the Aussie bond market looks expensive.
Yeah. Do I agree with that?
Yeah.
Look, I think if you look at it from a global perspective, we have a very solid rating. We have a very highly liquid currency, possibly the third most liquid in the world now, against the US dollar. The yield is very attractive. So from our perspective, I suppose, yes, it looks expensive, but from a global perspective, it looks cheap, and I think that's why the Commonwealth bonds have been bought so much. And we also have that quite high spread against US Treasuries.
The fact that about 80% of total debt on issue is owned by foreign buyers here. The pricing of that debt, some are saying, has been pushed out of line with domestic fundamentals.
Look, to some extent, the Commonwealths probably, you could argue, are a bit expensive, but there are other forms of debt. Semi-governments are quite inexpensive right now. So the focus, I imagine, in the next quarter will be on those semi-governments, and they're quite inexpensive now. And I imagine that sovereign wealth funds and other major investors will start looking at those more seriously. Yeah.
Dr. Nash, we're going to have to leave it slightly earlier than scheduled. Apologies for that, but thank you for your insights. Stephen Nash from